Hope you are well. Today, we are going to look at several misconceptions taxpayers have that reduce their tax compliance status and therefore end up not being tax compliant at all time. The first one is that with no income, or if you are a student, you ought not to file. Note that everyone who has a PIN must file for his return at the end of the year, or if they have other tax obligations that they had registered for, they must file them in accordance with the tax laws. The misconception of income is affecting so many taxpayers, for they believe or they have misconception that taxes or tax filing is done only by those who are under employment. You should note that whether you are employed or not employed, you must file for your return. In the same category of income, there are persons who are on employment and they have what we call today a side hustle. You should note that you ought to file for your employment income and to file for your side hustle. The misconception that you ought to file for employment only, that is a wrong misconception. Filing is mandatory to all persons with a Kenyan PIN. Secondly, so many employed persons have a misconception that the employer is the one with the obligation of filing for them. That is a wrong misconception. The employer, yes, has an obligation of notifying KRA and paying for any tax deducted from the employee, and the employee at the end of the year should get a P9 and file for his income tax. The other misconception is late filing, no filing, late filing or no filing has no effect at all. Note that failure to file your return automatically gives you penalties. Failure to make return, you just earn a penalty of non-compliance with the tax law of mandatory filing. The other misconception so many taxpayers have is that their personal expenses is deductible. What are your personal expenses? Your personal expenses include rent, water, electricity, food, school fees, medical, etc. Those are personal expenses that cannot be deducted from as an expenses that he has been incurred in the business you operate. Another misconception is that false filing or false filing isn't deductible. What is false filing? In our day-to-day interaction with taxpayers, we have noted that majority of them file nil return. This is despite the fact that they have a place or they are earning income either as self-employed or have other businesses that they do to earn a living. Note that KRA has a way of detecting what all that extra income you earn and don't declare. We are going later to look at how KRA can detect whether you have an income that you have not declared. It should also be noted in this juncture that failure for KRA to write to you, call you, does not mean that one day, one time, that issue will not come out. Note that any false filing is usually looked like fraud, and the 5 years timeline where KRA can investigate does not cover for such fraud cases or false filing. We have also noted that so many taxpayers believe that compliance matters or they need to comply only when they need a tax compliance certificate. This is a long misconception, for at the end of the day, you will find that for all years you did not file, you have penalties that ought to be filed before you are cleared and given tax compliance certificate. The last one, and which is more confusing, is that issuing or being issued with a tax compliance means you cannot be pursued, and KRA is certified that you have filed your return and you are free to go. That is a wrong misconception. Whether you have been given a tax compliance and KRA on their day-to-day investigation find that you did give false information, or their income tax that you didn't declare, or their taxes that you owed that you didn't pay, then that one will be looked at and you will be penalized, you will be investigated and penalized, and additional assessment done to you. Thank you very much for listening to us. Follow us on our Facebook page, Twitter page, YouTube, Instagram, Telegram, and our blogspot for emerging tax issues. Thank you very much.